What is going on, everybody? We are here right now to break down the Bitcoin price. Guys, if you like this content, hit the subscribe button, hit the like button, leave a comment, and that helps it trend a little bit, helps more people come in here and get the knowledge that they need in order to successfully trade on Bitcoin. Now, we're going to skip all the pleasantries. We're going to get right into it. As you can see right here, we are in what can only be described as a descending wedge pattern. It's been going on for about 4 months now. This thing started in June literally on June the 15th. So it has been now just too long. We've been through July, August, September, October, 4 straight months of really just sideways sort of. We've had a few pumps along the way, but as we have said and as we've stressed before, there was a massive trend line on the top leading all the way down to the bottom. I won't spore you with the details, but suffice to say that it was trending along this line right here. We got over it. Now we're using some lines of support that we've been using before. So that being said, we've trended a different way now. So we're making something new happen. And then it's time to look for something else. Well, we're still in descending wedge, and that's the pattern that seems to be playing itself out. And that's what we're on at this moment. And it looks like that we are headed for a breakout here by Tuesday, the 1st of November, if this is correct, and it's anywhere in this time, anytime within this period, we could be headed for a breakout. Now, the breakout does not mean that we're necessarily going to the upside. Now, this is the 1 hour chart. We're going to look at the 4 hour chart and get a little bit more detail over here. And you can see part of the reason that we're having this is because we're trending right now and consolidating and bouncing off of a floor line of 18,300. Now, why is that important? Well, if you start to move back here and you go back to 2017, then you rapidly find out that this is actually the top of the last market. So what we're doing is literally bouncing off of our previous top as our show of support. So you see how this thing seems to be moving. So expect a little more downside, expect a little more experimentation, probably down here. Don't expect for us to break to this upside right away. Probably going to take a couple of days. And there's a few different factors that we're going to get into in a moment. We're going to look at the day chart here. You can see the same thing is just kind of playing itself out. It's a little easier, by the way, to see the previous top over here. You can see, and we're just kind of, and have been using it as support. You can see this little correction area right here, and that's because we had hit the previous high. People were taking profits. This was a new area of exploration, and here we are. So that being said, this is the potential of these breakdowns. We can go two ways, obviously. And the most likely scenario is we're going to have a little bit of a break. But there's also some potential for some downside. Now, if we hit the downside, then it's important to look at where is there a level of support other than what we've seen already around the 17,500 level. And that means there's a little bit here at 16,000. You can see every time you hit a number with a bunch of zeros, you're going to have a little bit of support. But the actual level of support doesn't come until 12,000 all the way down here. Now, a lot of people tell you 13.8 because that's the top of this over here. And that's fair enough. I mean, that's one of those spots where you probably want to stand and fight. And you can see there's a little chop here because once we hit that number over here, then we got this over here from people taking profits because you're achieving a new local high. So you're going to see a lot of those things kind of playing themselves out, and they will happen. But generally speaking, what you're looking at is the opportunity right here for this breakout. Now, there's a couple things that are happening. First of all, the CPI report came out, and a lot of people were upset with the CPI because we didn't dip really hard. And the question was, why didn't we dip very hard? And it's a very simple answer. It's because the data doesn't look as bad as people want you to think it looks, because you're being manipulated in many ways by the media. Don't forget to subscribe, by the way, to the channel as we close this out. But the important thing is that manipulation comes from, we went from 8.3 to 8.2. Now, when we made progress, the people who don't want to see the progress or don't want you to recognize the progress, they want you to see the problems. They did a shift. They did a little bit of a shift of what was important, and instead of just going with the numbers as they were, they shifted to, well, August of last year or September of last year was this much, and this year it's this much. So we're not actually going down month to month, so that it looked like it was 0.2% higher, but it's actually down from 8.3 to 8.2. That reality still sets itself in. The other thing is we've been seeing a lot of reports and we've been hearing a lot of people who are renters in the market or investors who have rental property in the market that they are having trouble renting their property at these current tops and at these current prices. So what they're being forced to do is they're forced to reduce the rent because they can't fill their properties. Now, obviously people want to stretch and make as much money as they can. If you're a property owner and you're trying to do that, bless you. That's for you. That's your business. That's how you make your money, right? But if not, and you're a renter, then you want to see reasonable prices for the rent, and of course your expenses, your everything is going up except for your wages. Wages are not exactly stagnant, but they're not meeting the inflation number. Coming back to the key here. Well, we're having a breakdown in the oil prices. That's leading or will lead to a breakdown in the gas price. And we've already seen some drop in that. But the important part is another of those big factors is the apartments and rentals, et cetera, et cetera. And the banks are not really in a position to keep and continue lending. So you're seeing a little bit of a breakdown brought out by these rate hikes from the Fed. So what you're going to see and what you're about to see is a lot smoother sailing than what you've seen before. Now, it could be that we get that bulb effect and we get a little bit of a spike, but is it going to be sustained? We don't know yet. The matter right now is there's plenty of jobs to go around. We hear rumors of mass layoffs coming. We've seen a layoff or two coming or arrive, but we haven't really seen a breakdown in the economic structure the way that the pessimists have really looked at it. So people like me, people who you would consider to be a moon boy, they're thinking that this market is about to get sent, that we're about to have a nice little rally. Does it mean that we're going to continue a rally? And the answer to that is no, we're not going to continue a rally, but we are going to have some tremendous upside. And that upside probably lands somewhere in the neighborhood of 30,000 at a very maximum, with the most likely scenario being that we end up somewhere in this 23, 24 range, because you can see the market kind of likes it right around in this area. So, that's the best that we can ascertain. But we are going to see a pump. We're going to see a move to the upside because the reality of these markets and the reality of the earnings reports have been not phenomenal, but they've not been nearly as bad as what a lot of people were telling you were going to happen. So when you see that and you see it doesn't add up, then you get a little bit riskier because you think that maybe you found your bottom, and now that the bottom's in, this is the opportunity to make the money, and this is where you lay in, and this is when the pros do what they do, and then that lets everybody else know it's time to run. Well, it looks like it's time to run, but let me know what you think down in the comments below. Remember, this is not financial advice. My name's Believes. I'm always right. And I'm not really always right, but I do use that as a slogan. So if you got to tell me that in the comment section, don't leave a comment, because I know it, you know it, we all know it. It's called a slogan. It's called a motto. It's called, call it whatever you want. But remember this, we are headed for some upside. We are headed for a breakout one way or another. I can tell you that. If the market goes crazy, then we could see downside down to 12. But I do predict that we are probably going to see this kind of move right here to 24, 25 area. And if not, we'll get a full-on breakout and we'll start to test that support line again at 30,000. It's not financial advice. My name's Believes. I'm always right. And we will see you guys again very, very soon.